Hey, welcome back everyone. It is time for another red hot covered call video. Hey, look, if you haven't been to my channel, what we do here is we talk about owning shares of stock and we give somebody the right, but not the obligation to take those shares away from us. But here's the deal. We set the price, we set the time frame for which we give somebody to take our shares, and we get paid a premium. They call that writing covered call. And there's an opposite strategy where you have the cash and you want to give somebody the right, but not the obligation to assign their shares to you. But see, you pick the price for which you want to pay, you pick the time frame for which that cash will sit on the sideline, and you get paid. They call that selling a cash secured put. These two strategies are what we talk about here at this channel. It's called selling premium. And for me, it's like I'm the house. I'm like a casino, man. I feel like I'm dictating the terms and I'm getting paid. The covered call strategy is one of the most conservative strategies on Wall Street. In fact, in most 401k accounts, you can actually write covered calls against the shares you own because you're covered. You can actually sell somebody the right to take your shares away from you at a higher price. And that is called getting paid. I call that my cash printing machine. So look, we're going to talk about how I make money when the stock goes up and down using both the covered call and the cash secured put. Now look, I know a lot of you are going to find this confusing, overwhelming, and you just don't get it. But what I'm going to ask you to do is just hang out with me and watch my videos, because here's the deal. This strategy is one of the easier strategies on Wall Street. Once you learn it, once you get that experience, you can feel it, you can do it, and you can become the expert. You have to believe that. You know, with every strategy, with anything you do in life that you're going to be great at, you have to put time. You have to put work at it. And here's the deal. This investment strategy, you have to put in the homework. You have to get your financial education. But the beautiful thing here is you can watch videos on YouTube for free. Look, you don't have to pay anybody to get where you need to be to do this strategy. If you just hang with me, watch my videos and learn, you're going to find that you too can do this. And hey, look, I don't charge you nothing, man. And I give you the tools to up your game. Look, if you've never been to my channel, I need you to subscribe to the channel. It's right there and it's free. And look, if you like this video today, I want you to bang that like button. It lets me know you like what I'm doing. And hey, look, what we're doing over on my website, CPT Dashboard, I'm giving all my tools away for free. I have a free version of the CTP Dashboard for which I load it every Wednesday with the best stocks trading right now to help you with your research find that next covered call candidate. And I offer up all the free spreadsheets that I show you in my videos. Why? Because you have to keep the numbers in front of you. And hey, look, I don't charge you nothing. Look, it does not take a financial expert to create the kind of spreadsheets that you need to keep the numbers in front of you. That's why I created them, and that's why I offer them up to you. So look, what I want you to do is sit back and just watch this video and get a feel for what we do. And if it excites you, then you can start watching more videos and start to feel more comfortable with it so you too can have the success that we're having. And in fact, we are having tons of success. Remember last year, I made $39,000 for the entire year. This year, I wanted to make $50,000. My man Jerry said, look, you got to up your game and go for $50,000. So that's my goal. Right now, I'm at $40,050. Look, you can do this. You have to believe in yourself. You have to do your homework, and then you have to get your experience. I encourage you to get your experience because that's when the moment hits you. You know, Jerry's always told me, look, you have to feel it. You know, we could talk about this all day, but until you feel it, that's when you own it. And when you own it, man, you can work the strategy and have success. Hey, look, let's go ahead and get to today's theme. Today, we're going to talk about a couple trades that I've made in the past. We're going to talk about how I have made money up and down in a tight range with Alibaba. We're also going to talk about Chevron and how I use Chevron to make some great covered calls, collected a dividend, but we're going to talk about how I picked that stock when it was trading in its range. I've done a video on that before, and it's very important to have a great entry point. Even with Alibaba, I thought I picked a great entry point based on the chart. As I found out, that's not always the case. Hey, look, this can be a crapshoot, right? Nothing in the investment world is guaranteed. All we're looking to do when we use the covered call strategy is to minimize our risk. There's still risk there, okay? So let's go ahead and talk about my recent Alibaba trade and let you know where that's at right now, because if you remember my last video, man, I was getting kicked in the ribs, and we'll talk about that successful Chevron trade that I think you're going to like. Okay, so here's the setup. Alibaba for me was one where I thought it had fallen. Look, Alibaba is the Amazon of China, and here's the deal. Wall Street is going to play them up and down. They're a volatile stock. You have to understand that. Now look, they break many covered call golden rules. They don't offer a dividend. They're highly volatile. Look, if you're going to play Alibaba, you need to know what you're playing with, right? And in this case, I've used Alibaba in the past, so I know it is highly volatile. Now look, I'm not overreaching here for the big premiums. Look, because Alibaba is so huge, it's like a $500 billion company. It is the Amazon of China, and we know the consumer market in China is only growing. For me, Alibaba is more of a staple play that has volatility. So with that said, I've played Alibaba in the past, and I've actually made some money. I was looking at Alibaba's charts, and man, the stock had come down. It was as high as 210. Well, with all the trade war talk, Alibaba had fallen back down. So I'm trying to find that sweet spot to get in a good entry point. And I'm going to show you on the chart here where I thought that was. And Alibaba wasn't working with me, right? It turned out that it fell another 20 points. And I had to manage this really bad trade. So for me, Alibaba is about patience, understanding the stock that I'm holding so I can write other covered calls, buy them back, right? That's what we do here. I write a covered call, and if the stock falls, I'm going to buy that option back, alleviating the obligation. And in many cases, I'll do it even if it goes against the guru's normal buyback procedures, right? I mean, look, a lot of times people write covered calls, the stock will fall, they'll let that option go to expiration, and then they'll write another covered call. I don't do that. Hey, look at the chart. I wrote a covered call on Alibaba, got paid $3.35, and when the stock fell, I bought that option back for $1.80, alleviating the obligation, and I could sit there, prepare myself for the next trade. It wasn't but a couple days later, I wrote another covered call and was able to buy that back. I feel like I'm putting money in my wallet. Now, yeah, the stock is falling, and some will say, look, man, you're holding a stock that's falling $5 and $6. But look, I'm going to own Alibaba, and we're going to play this strategy. We're going to work this strategy, and I'm not going to sell lower. So I'm going to pick up these little crumbs playing the game. Now, hey, look, I hate calling this a game, but it is a game. It's a game within the game. And once I buy a stock, no holds barred. I will write a covered call, buy it back, write another. We repeat, repeat, repeat. I've done this multiple times. Microsoft and Bristol Myers, I have written 10 and 12 covered calls in the cycle for which I own the stock. Hey, look, I'm all about making those little baby crumbs, because when we do this on 1 stock, 3 stocks, 5 stocks, those crumbs become real money. Now look, let's go ahead and look at that Alibaba chart. I'll go ahead and point out what I saw, and maybe you'll get a little insight as to what I'm looking to do with Alibaba. Now look, if this is the first time you've been to my channel, you probably think I'm wacky, right? I mean, I'm making trade after trade after trade, and sometimes they don't even make sense. But here's the deal. Like I've told everybody on this channel, I'm an active trader. And for me, I love trading, but I'm going to use the conservative strategy that is selling premium. Now, with that said, I love to use the covered call and the cash secured put to try to make those little crumbs of premium while I'm holding the stock. See, I have no expectation of holding Alibaba for years and years and years, right? I'm going to buy Alibaba, and I have expectations of making a certain amount of money while I'm holding it. In this case, I bought Alibaba hoping for a 30-day 5% return. What does that mean? I buy Alibaba, I write the out of the money covered call, picking up the premium and the stock appreciation, and that's my 5 to 6%. Now, they'll take my shares, I get the cash, I find another stock, and we do it again. That's my expectation here. Now, when Alibaba falls, I have to manage this trade. I cannot sit on my hands, because if I sit on my hands and the stock keeps falling, I'm not only holding the loss, I'm holding the emotional loss, right? That baggage I'm carrying on my back. And I'm not going to do that anymore, because if you remember when oil crashed, yeah, I just sat there sitting on my hands as companies like Conoco fell from their all-time highs down to damn near 10-year lows, and I carried the emotional bag with that. Now, all of those trades came back, all of them were successful, but I made the determination I wasn't going to sit on my hands for 2 years and hope and pray. So with that said, let's look at Alibaba here in a tight window and see what I've done. So as you can see on the chart, I'm looking at Alibaba, and Alibaba in a perfect world, is just going to ride that support line. Every time it hits that support line, Wall Street loves to buy them back. And in fact, on this last one right here, it sort of proves out, right? It hit that support line. It did the double support line bounce right here. I'm thinking this could be the next pop in the stock. So we get the double here, and look, we actually get a nice little spike. But because of the China trade wars, look, that ain't going to happen. Right now, anything China, nobody wants to hold it. And in this case, Alibaba became a hot potato for somebody, and they're selling it off. When Alibaba fell down here to the mid 170s, I'm thinking, look, this is a great opportunity to buy some Alibaba shares right here, because with the fluff being sold out of the stock, Wall Street may buy it up and make that run back to at least 200. I'm only hoping for 200 here. That would be fabulous. I'm going to write that 180, 185 covered call, collect that $3 and $4 premium, and hey, I'm out of the trade. Now, what ends up happening is more trade talk. Well, Alibaba, being the huge company that it is, it feels the pain. And look what we get. Alibaba has fallen down to the 150s. Now I'm holding Alibaba, and as Alibaba's falling, and we get some green days here. Do you see the green days? Well, on those days, I might write another covered call. Let me explain that. So I buy Alibaba right here, and I write that 180, and I get paid $3 for it. Alibaba falls significantly. That option that I got paid $3 for, it falls to 180. Well, look, I'm going to take that off the board, take that obligation off the board, and I'm going to go ahead and wait for another opportunity. And sure enough, Alibaba right here gets that little bit of a bounce. I write the same option and collect the same premium. And look, that's what I look to do. Now, Alibaba falls, and as you can see, it really falls. And that's what inspired my last video, handling a really bad trade. Now, in this case, as Alibaba's fallen, right, I see this support way down here. And I'm thinking to myself, okay, this is a perfect opportunity to do a cash secured put. And remember, I like to look at a support line and maybe sell a cash secured put about $10 under that support line. Remember what a cash secured put is. I put up the money, I pick the price for which I will buy somebody's shares, in this case $10 lower. I pick the time frame. I pick 30 days, and they're going to pay me that premium. Well, I pocket that money if Alibaba heads higher, and I'm never assigned the shares, right? Because they're going to assign me their shares if the stock gets below my cash secured price. So in this case, I wrote 2 cash secured puts at about 155x. And I was able to pick up some good premium. Now the stock never got there, and of course I'm not holding it for 30 days because look, we get a rally off the bottom here. So those options for which I got paid $1 here or $2 there, as the stock starts to turn and heads higher, that premium starts to shrink. So I would go ahead and buy that option back for less than I got paid, and I pocket the difference. That's how I use a cash secured put, to cherry pick some profit. Now look, let's finish this up here. As Alibaba bounces off of that 150 mark, it starts to head higher. And now my stock purchase price, because of all of these options that I've written, whether it be a covered call or sell a cash secured put, it has brought my cost basis down. And in fact, my cost basis is about 166. Remember, I bought Alibaba at about 174x. All those cash secured puts, covered calls, has brought my cost basis down to 166. Now, I don't make any money if the stock gets to 166 and I sell. I just need to know when I'm profitable. So with a cost basis of 166, I know that if the stock gets anywhere near 166, I can write that next covered call, maybe $5 to $10 out, and I'm going to make a little bit of money. And in this case, that's what I did. As Alibaba started to move higher and above 160, I knew I could come in and write a nice 170 or 175. Look, I'm not going to make that much money, and I'm probably not going to write home about this trade. But look, when you're managing a stock that has fallen 20 bucks, a lot of times a green trade, however that green trade comes, you'll take. And in this case, looks like I'm going to get about 175 for my shares. I feel comfortable that Alibaba is now based, and man, if I could just get to 175 with all the premiums I've collected, this is going to be a nice 5% trade. And look, I'll take that money, we'll reboot the strategy, we'll pick another great stock, we'll do it again and again and again. Let's talk about that Chevron trade, because I want to talk to you about how I trade in a range with Chevron. One of the things I love doing with Chevron just ticks higher all the time, right? And even when it falls, it doesn't really fall, right? Chevron's one of those huge global companies that Wall Street just loves to have in their portfolio because it pays a nice dividend, they have a great business, and the company seems to be managed right. What I find is every time Chevron dips a little bit, Wall Street buys them. Now, this chart is a couple years old, so as you can see, every time it goes higher, it seems to dip back. So I love this as a range trade. So what I'm going to do here is I'm going to buy it lower on the range. Probably Similarly, if I brought up a Keltner channel chart, every time I make a purchase right here, it's going to be at the bottom of the Keltner channel. Now, that doesn't mean that the stock's going to go higher. But see, I play Chevron a lot. So I know its characteristics. I know when their earnings are. I know when they're going to pay their dividends. So for me, it's a very comfortable stock. You know, if you were teaching me how to do covered calls and you said, hey, John, find that one great stock, that one comfortable stock that you could play so you get your first safe trade under your belt, probably use Chevron. But with that said, that doesn't mean Chevron doesn't come without risk. Chevron has been as high as 130x, and during the oil crash, it got as low as into the 70s. So look, everything comes with risk. But what I like to do is minimize that risk by using great companies like Chevron and trading them within a range. Now, the way Chevron works out for me, I've written a couple covered calls as the stock has peeled back various times to that support line, and I've collected a dividend. They pay a juicy dividend of over $1, so I felt like that was a bonus covered call because I was able to collect that dividend, collect those premiums for the covered call rights, and because I've reduced my cost basis on Chevron to about 117x, hey, look, if I can get 125 for my shares, and notice it is trading right around 122.5, look, this is going to be a profitable trade, and in fact, for me, in this 2-month window, it's probably going to be about 7%. We're going to use the strategy, we're going to execute the strategy, and so far, it's been working out, and I'll tell you what, I have more success now than I have ever had trying to swing trade or day trade. Now, hey, look, before I let you go, my next video is going to be a little more detailed on how I use that covered call and that cash secured put on one stock when a stock goes higher and lower. Look, that's the strategy I use to not sit on my hands as a stock goes lower. It doesn't work all the time, but look, for the most part, it has worked, and I use that strategy all the time. Now look, whether I make money on a trade or not does not matter. What I do is I show you my trades, we talk about them, and maybe you learn something. And really what I want to do is motivate you to get off the couch, open up that small account, and get your experience. Because like Jerry's always told me, you have to feel it. And when you feel it, that's when you own it. That's when you learn it. What I'm going to do, what I'm going to hope for is that I inspire and motivate you so you get off the couch, you open up that small account, and you do your very first safe trade. Because that is your first step to having the success that I'm having. Hey, look, if you like this video today, I want you to bang that like button because it lets me know you like what I'm doing. And look, share this video. Let others know that we can make money writing covered calls and selling cash secured puts, whether a stock goes up or down. And we're going to have great success. Hey, look, until next time, I hope all your covered calls are profitable.
All I see is signs, all I see is dollar signs.